Hey guys, Mike Cox with Mortgage Nerds here in Appleton, Wisconsin, and I am with
Pam Gustafson with Mortgage Nerds.
Yes, you are. Today we're going to go through what not to do after you're pre-approved, right?
Yes.
So once you get pre-approved, your loan officer goes through all those hurdles with you. What not to do? What do you got, Pam?
Okay, first one I would say is don't change your job or become self-employed
Or even your pay structure,
Correct,
right?
correct.
And why? Why?
Well, if you change a job and it's totally different field, you may have to wait 6 months just because it's that change in field. If you were a salaried or W-2 employee and you go to a commission employee, you need a history of that.
Yeah, that's the bigger one.
Yes.
I guess they're all big, but like there is a chance you could switch jobs and you'd be totally fine.
Right.
Right? But it's a variable you don't really want to mess with.
No.
And during this time, you do not want to be switching jobs or how you're paid. You could even be at the same job. I've seen this before. Truckers go from W-2 to mileage, which is actually commission.
Yes.
You need a 2-year history of that. And they're like, oh, I make more money.
Right.
Well, yeah, you make more money renting still.
Yeah.
Right? Because you can't. So the theme of this, and we'll get to it now or reiterate it at the end, run everything by your loan officer.
Exactly.
Everything. Okay?
Yes.
So don't switch jobs.
Yes.
Number 2.
I got the list here. Don't go out and buy a brand new car, truck, boat.
Furniture.
Yes.
I'm trying to think of all the things that, larger purchases. Well, you really wouldn't want to open a credit card or do any large purchases,
Exactly.
right? Okay.
Yeah.
And why? What's that?
Well, I mean, most programs are debt ratio sensitive.
What's the debt ratio?
Debt ratio is your monthly payments divided by your gross monthly income.
Right.
And if you open up a new account and that monthly payment structure takes you over the debt ratio, you just unqualified yourself.
I love that. You unqualified yourself, which you don't want to do.
No.
Then you make us try to come up with all these different scenarios that get you back qualified.
Absolutely.
Right? So we get a scenario that your DTI is 2945, let's say. 45 is the max DTI.
Right.
You go out and buy a car with a $500 payment. Your DTI went from 45 to 48.6. 48.6 is refer eligible, which means no house for you. Right? So don't do that. What else you got?
Well, inquiries, that's the same. You know,
Okay.
if you are applying for credit, like you mentioned, furniture, that kind of thing, an inquiry, a lot of times they'll pull a credit refresh, it's called, not necessarily rescore, but pull a credit refresh to make sure that you are still making your monthly payments and that you didn't take out new debt. Even if you inquire and you didn't open a card, it can be a real pain to prove that you didn't take any
another
new
hurdle
debt.
that you're gonna have to address. And a common thing too with the whole mortgage process is be upfront with your loan officer about everything because they'll help you solve problems. If you try to hide it, like this whole transaction is designed in a way to make sure that the lender knows literally everything about you and that nothing can slip through the cracks.
Absolutely.
Right? So even if it's not caught in the beginning, it will be caught. It will be caught.
100%.
So our job is, to make sure that we structure the transaction in a way that it can get through processing and to closing with the least amount of hurdles as possible. And we want to be rowing in the same direction with our clients, right, and not working against you. So
for sure, we're on your side.
Absolutely.
Yep.
What else you got?
Excessively charge up your current debt, like your credit cards or things like that. Again, the credit refresh could come into play. Your minimum payment on your credit card could go from 50 to 150, and that could be an issue.
Yeah, and again, a lot of this too, it could not be an issue.
Right.
But you just don't want to take the chance, right? You don't know. Right. And then obviously your credit bureau is, well, not obviously, just so you know, your credit bureau is good for a certain amount of time. And if it's good through the end of the transaction, you're fine. Your credit score that you had at that time is fine. But if you charge up your credit card a significant amount, or you do an inquiry, there are some cases where a new credit bureau may have to be pulled to prove that you didn't have the inquiry or whatever. And then you're subject to the new credit score. And if your credit score drops, like lots of variables. So take this stuff seriously.
Most definitely.
All right. What else you got?
Deposit large amounts of cash into your account.
That's true. Why?
Underwriters want to track large deposits. If you have...
What's large?
Large would be typically on an FHA loan, anything over 1% of the purchase price. on a conventional loan anything over 50% of your gross monthly income.
Pam knows her guidelines.
But it's just, have the conversation.
Yeah.
If you have an average balance of $1,000 and all of a sudden there's $10,000 in there, they need to know why.
Right.
Or where it came from. It can be a gift, like we say, have that conversation.
And it's not that you can't do this stuff.
Correct.
It's that we want to know why you're doing it, when you're doing it, if you need to do it, and if you do need to do it, prepare you for the documentation and the process that's going to surround that incident, right?
Right, absolutely.
All right, what else you got?
Also, don't spend the money that you have set aside for closing day.
Like we're literally telling you all this stuff because it's happened many times.
Yeah, this is our list, and this, yes.
So many of us in this industry have dealt with this, and definitely this has happened to all of us at some point in our careers.
Definitely.
So don't spend your down payment. I'm not even expand on that one.
Right.
Just
yes. Don't do
that.
Let's see, what else do we have? Pay off collections or dispute.
Why? Like if I have a collection and I pay it off, my credit's going to get better. Why would that be bad?
That isn't always true.
No, because it's a false statement.
Correct. If you have a collection from 5 years ago and all of a sudden you decide, okay, I want to pay this off, that could actually hurt you because 5 years ago, and that account kind of has probably laid dormant, and then all of a sudden you resurrect it by paying it off, then
like,
it looks like it just happened.
Pam reached out to me. Boom. Now it's a fresh collection.
Correct.
Which shows a negative, and then your score goes down.
Yes.
There's tricks and tips and a process for that.
Yep.
We would love to share that with you. We'll do another video about that. But if you have any questions around that, please reach out to us. But do not touch anything with your credit.
Right.
And even if you think you're doing something positive, even paying off a debt, right? Or paying off anything, make sure you talk to your loan officer. It's not always a good thing.
Right.
Okay, what else we got?
Don't change bank accounts midway through.
It's really just a pain.
It is. That's really all it is. It's not that it's...
None of this is like you can't do it.
Correct.
It's just you shouldn't.
Yes, because then it's tracking the old bank account and then the new bank account opening, and
you may not have access to the old account that you we need to show that you let's say we're seasoning funds for 60 days and you started a new account, closed your old one. How are we going to tap into your old one if you don't have access to that anymore?
Right.
It just causes this whole pain point for people that you don't need. You can close in your home, switch banks then.
Yes.
Right?
Right. Absolutely.
What else?
Let's see. Cosign. Don't go out and cosign a loan for someone.
I'm just cosigning. I'm not on it. How many times have you heard that?
That a lot.
Yeah. Okay. So, want to explain what that really means?
Cosign, you're responsible.
You are taking the loan just like anybody else.
Absolutely.
Yep. There is, like I know parents want to cosign for kids. I'm not against it, but I'm also not for it either, right? If you can find ways to do it, or maybe talk to a mortgage advisor ahead of time, get your kid in a situation to empower themselves to do it on their own. Educate them ahead of time.
Right.
19, 20 years old, have them contact us. They want to buy a house in the next couple of years, right? Relieve yourself of that duty of co-signing or the need to, because you are responsible for it just like they are. So we do have to use that in your debt ratio.
Yes.
There are cases where we can exclude it, but again, it just makes it nice and clean where you don't have to.
Absolutely.
Right?
Yeah.
Okay, what else?
The biggest one that we've kind of gone over is talk to your loan officer. If you have, if anything, you kind of have a question about.
There's so many more that we could really go into. We can go into the weeds here, but the common theme, talk to your loan officer. They're your partner in this transaction to get you to closing. That's what they do every single day. They've seen it all, they heard it all. They don't care, they don't judge. Their job is to get you to closing. So full disclosure on everything, and they will guide you to closing. And if you don't feel the person that you're talking to has that confidence or really understands that process, you should probably ask around and see who other people have used that they're happy with, and that you need somebody to control the process from start to finish to make sure these things don't happen. Otherwise, you think you're helping yourself, and you really can hinder it. So you need somebody like Pam that can control the process from start to finish.
Your realtors need to know that the person that you're working with is going to get you to that closing table. Versus, with the competitive market, you don't want to be that person.
Absolutely. You do not want to not close or even delay a closing.
Correct.
Oh,
no.
That's bad.
No.
Bad juju.
You're right.
All right. So hopefully this advice helps you guys out and just makes you truly understand use your loan officer as a resource. That's what we're here for.
Absolutely.
Don't do these things. There's a rhyme and reason for it, right?
Absolutely.
All right, guys, remember, mortgages are complex. Let mortgage nerds
give you the answers that you need.
All right, see you guys.